week, we take a closer look at Ancom and Nylex, which have been in the spotlight and not for the right reasons. So during the week, former Tourism Malaysia Chairman Datuk Siew Ka Wei was remanded, which we will get into, but he is also the Executive Chairman of Ancom and Group MD of Nylex. So Ancom is a diversified group with interests in almost everything from agriculture, logistics and media. Nylex, on the other hand, is more pure, let's say, with business solely focused on petrochemicals, plastics and polymers. So it will be interesting to see how both will fare after the scandal, and of course, who has the prospects to recover better and whether there was actually already trouble brewing even before that. So let's match them up. Ancom actually started in the agricultural and herbicide business back in 1969, and along the way it actually changed shareholders a few times, and the Ancom of today is a diversified bag with businesses in agriculture, polymer, IT and media, which it does through its subsidiary Redberry. Yikes, where to begin? So, Ancom's Executive Chairman, Datuk Siew Ka Wei, was remanded by the MECC for 4 days related to this 99 million ringgit contract when he was Tourism Chairman. It was exposed by the former chairman, actually, Wee Chu Kiong, who called it a Speedy Gonzales deal that was pushed through in 1 day. Okay, so the company has come out to say, Ancom that is, that it's all business as usual and that all divisions are under their respective heads with proven track records. Saying that, it ain't great, is it? Especially since he is still a major shareholder with a 20.93% stake. Its share price dropped on the news and it continued to do so well into Friday, declining around 2% or so in morning trade. But that aside, the fact is that not all of Ancom's divisions were doing so well. Agriculture, logistics and polymer biz all posted lower revenue for its first quarter of FY19, which ended August 31st, 2018. On top of that, although Redberry did have higher revenue, it is loss-making because operational costs are high. Going by pure results, it did really well in the first quarter, with net profit jumping to 7 million from about 1 million the year before, which means not all the divisions did badly, especially for top line. IT business actually did better, 9.2 million in revenue compared with 3.9 million the year before, and although loss-making, losses are actually narrowing. Industrial chemicals did better because they sold more, prices were higher. All in all, except for media, the company is expecting all the divisions to perform satisfactorily given the current market conditions. And now all the indicators seem to point to that. But the caveat is that all of this was before the whole arrest, so things may change. No coverage on the stock, but if you go by historical patterns, the highest close was around 67 cent and lowest is around 41 cent. But if you take the average, it's just over 51 cent, which where it was at the end of last year. Nylex is best known for manufacturing and marketing of vinyl-coated fabric, sheeting and plastic products. Subsidiaries are involved in the making and selling of PVC and polyurethane items, just making sure. Its products are sold to Europe, Middle East, Africa and of course Asia. Similar to Ancom, but in this case, Siew Ka Wei was its group managing director. Again, company says that operations are unhurt and that they will soldier on. But losing a member of the management team will mean that a lot of plans might get interrupted. But aside from that, Nylex says that the global trade disputes going on between the US and its trading partners is unsurprisingly bad for business. Ditto, currency volatility and uncertain market conditions, and that will definitely put pressure on margins. Its polymer division in particular was hit because of weakening rupiah and low contribution from its Shah Alam plant. Earnings ain't bad. For its first quarter of FY19, Nylex saw a net profit almost double from 1.6 million the year before to just over 3 million. Revenue also grew from around 314 million to just about 420 million. According to Nylex, again, the savior was the industrial chemical division, the one where you saw more volume and better selling prices. To give an idea of how much better it did, profit before tax for the quarter was 5.5 million versus just over 1 million the year before that. So concentrating on this division at least seems to smooth out some of the bumps. Like Ancom, nobody really covers this stock, but the average trade is around 68.1 cent, which actually is not that far off from where it is now. But at its highest, it was 84 cent. But interestingly though, Nylex actually fared better when it came to share price because there was some recovery. It could be because the business is more focused and the prospects are a little more clear.